All right, today we're talking about the best kept secret in federal benefits when it comes to your financial plan. Of course, I'm talking about the total compensation statement. We're always surprised how few federal employees actually know about this thing or have pulled it down in recent history, and it's really a wealth of information. It's everything you need to know about your benefits to update or create your financial plan. So, what we want to do today is actually take a look at that total compensation statement, show you what it looks like, show you how to interpret all the data that's hanging out within that very special document. So, guys, I'm Justin. I run a wealth management practice here in Northern Virginia. We're focused on helping federal employees transition into retirement, answering questions just like this each and every day, spanning across, I don't know, like 10, 20 years out from retirement. That's really when this process should get started. So, anyway, back to today's topic, the total compensation summary. You want to take a look at it? Let's go ahead. Let me share my screen with you here and we'll get right into it. So this is, let me back up 1 second. First things first, where do you find this thing? Go to opm.gov, search GRB platform. And when you do that, you should see a list of links for agencies. You can find your agency, log in, and then when you pull down the statement, it's going to look exactly like this, right? Okay, so this is the total compensation statement. Top, you'll see your name, you'll see all the relevant data associated with your employment. And what this thing's designed to do is show your direct pay from salary, direct compensation, and then assign a dollar value to your benefits, right? And then you're going to see that here. So in this case, for this particular employee, 73% of their total comp was coming from salary, 27% is coming from those agency benefits. And you can see right here, this is where it all breaks out. So it's going to show you exactly how much those benefits are worth. So this is great. You can see what your total comp is above and beyond just your salary. But the beauty of this report, this statement is, it tells you everything about all the programs that are available to you, the ones you're enrolled, even the ones you're not enrolled. You can take a look and see now might be a good time to revisit that. So it's going to cover all those insurance benefits and the retirement benefits that we love. So let's go ahead and dig into it. The first section, of course, is going to be the federal employee health benefits, your health insurance. And it's going to show you the plan you're enrolled in, the enrollment codes, all the back end stuff, as well as the premiums you're paying and the premiums the agency is paying. Now, keep in mind, with your health benefits, the agency will pay up to 75% of the premium. You pay the rest. You pay the rest with pre-tax dollars, which does equate to some tax savings. And you can make changes on this plan during open season, which comes around once a year, or if you have a qualifying life event during the course of the year. So fairly straightforward when it comes to the federal employee health benefits program. You can see right here. So this is what the document looks like from that standpoint. All right. Next on the list is the federal employees group life insurance program. Okay, so this is the group term coverage that you have by being an employee. And by default, you're enrolled in the basic life insurance option. And that is 1 times your salary, rounded up to the next 1,000 plus 2,000. So complicated way to say you basically have 1 times your salary as basic coverage. You're enrolled in this thing by default, but you can opt out of it. The agency pays 2/3 of the premium, you pay 1/3. Okay. Now, in addition to that, you can enroll in standard, additional, or family coverages. The standard is just a simple 10 grand that you can tack on as a death benefit. Option B is the multiples. So you can add multiples of your salary, the additional term coverage to protect your family up to 5 times. Okay. And then the option C, the family option, you can add coverage on a spouse or a kid, $5,000 increments on a spouse, $2,500 on a kid, up to 5 times those increments. Okay. Now you're going to see down here, it's actually going to show you exactly how much coverage you have under basic, the standard, additional, or any of the other, the accidental death benefit options. So you'll see comprehensively what you have, and then the premiums, what you're paying for them. The important thing about Fegly is I think it's a wonderful intro level insurance program, right? So there's no underwriting. You can just get coverage right when you start employment. Super important, but it's age banded. So that means premiums are based on your age. And as you get older, your premium is going to increase. And it happens to be pretty substantial as you hit older ages. So it makes sense to me, from a financial planning standpoint, to investigate all the options that exist out there in the open market, something that might even be more permanent or just a great term policy that's going to give you consistency with your premiums and it's going to be, could be a better fit for your situation. So it just depends, something to consider. Okay, and next on the list, the dental and vision insurance. Let's just look at the document here again. So you can see this is straightforward. If you're enrolled in the dental and vision programs, it's going to show up here, and it's going to tell you what your premiums are. Okay, we'll move on from that because it's so straightforward. Federal long-term care insurance program. This is the long-term care option that's available through your federal benefits. Now, I will say this, right? Well, the document's going to show you what your premiums is and basically not much else. But here's how to think about this. There has been an incredible amount of change within the long-term care industry. There's nothing special about this policy. It's basically a policy through John Hancock that's administered by a third party, FedPoint, I think is the name of the party. But you don't get a break on the premiums. Nothing special about it. The only real benefit is there's no underwriting that's waived if you're a new hire. Okay, so that can be beneficial if you have some sort of issue, might prevent you from getting long-term care independently. If not, think about it, right? What's changed? This policy has changed in the last few years. They've raised premiums significantly across classes of policyholders. So all policyholders have seen changes because long-term care insurance companies have seen drastic losses. So they're coming back and saying, look, we can't do this. We need to raise premiums. And they've done so substantially across the board. So the industry is evolving. There's becoming hybrid policies using life insurance and annuity products to kind of create maybe a little bit better of a solution, at least a more flexible one for some folks, right? So if you're younger, think carefully about enrolling in this. It could be the right move, but you may also end up paying premiums for an extended period of time that may then go ahead and get raised on you. So that's how the long-term care program works. Think about that in the context of your financial plan. All right, so what's next on my list? Flexible spending. I like flexible spending accounts. These are cool from a tax planning standpoint. So there's 3 FSAs associated with your federal benefits, and you can see them right here. Healthcare FSA, Dependent Care FSA, and the Limited Healthcare FSA, okay? Basically, what happens is you put pre-tax dollars in this thing, and if you use them for qualified eligible expenses from a medical standpoint or dependent care standpoint, the money comes out tax-free. So you don't pay tax on it. So savings from that standpoint can be, depending on what your marginal tax bracket is, that's your savings. Okay, there's limits on what you can put in a healthcare FSA this year. It's $3,050. The kicker is you can only roll over a small amount. So if you're not using this for those healthcare expenses, then you might lose some of that capital, right? Because only a small amount rolls over each year. Dependent care FSA works the exact same way, only it's used for those dependent, like camps, preschool, daycare, that sort of thing for kids, as well as adult daycare if that's a need for your family. So think about the FSA. I think it can be really nice tax savings tool for your family. Okay, so we're going to talk about the next 2 options fairly quickly: workers' compensation and Social Security. So basically, this part of the document is just going to show you what you get if you're disabled and kind of some of the terms of the program here. All right, and it'll actually show you with dependents and without dependents what your benefit may be. Okay, so important stuff. I don't want to gloss over it, but it's just straightforward. And then Social Security. This section of the report just serves as a reminder, hey, go to ssa.gov, pull down your statement so you can see exactly what you're going to get at 62, full retirement age, and at age 70. So just kind of a reminder there. The next part, I mean, we all love the TSP, right? So the TSP is your defined contribution plan, your investment portion of retirement benefits. So you put money in this thing, either pre-tax or after tax with the Roth option, and you have the option to invest it for future growth. So we love the TSP. This section is going to show you what you have in a traditional versus a Roth balance and your total balance. It's also going to have this nice box here that's supposed to show you all your allocations broken out between traditional and Roth. I found this to be inaccurate in a lot of cases, actually. So make sure you check your TSP statement for the most up-to-date, accurate information, okay? Because it might not be accurate in this box, but hopefully it gives you an idea. Now, it is important to note with the TSP, you want to make sure you have the right investment mix. And I would say stay away from the L funds. You can make a better mix if you pay a little attention. Think about what you want to do from an investment standpoint, your time horizon, your goals, etc. Put together the right mix. And rebalancing is important. Do it at least once a year, if not more often. Just look at things, see what might need to be tweaked. Okay, so very important stuff. The next section of this report will actually show you an annuity. So you can take an annuity from the TSP. Not sure why you would want to, but you can surrender your money to an insurance company. They'll pay you a fixed payment for the rest of your life. Basically, a TSP annuity, they give the money to MetLife. MetLife pays you that annuity, and they'll give you a projection based on single life or a joint life. Okay, so straightforward thing. Tread lightly before you go ahead and make that commitment to the MetLife annuity. And the last section is going to show you what you're contributing. Okay, so what's going into traditional, what's going into Roth, and then the agency contributions. Hopefully, you're getting that 5% maximum match between the auto contribution and the matching. So if you're not, go ahead and update that immediately. Okay. The current contribution limits are $22,500 for employees under the age of 50, and there's a $7,500 catch-up for 2023 if you're over 50. And the next session we're going to cover is the FERS annuity. We love the FERS annuity. It's a defined benefit plan. These things are rare these days, and they're super important. Guaranteed income stream. So this is going to show you what your FERS annuity might be at different ages. Let's go ahead and take a look at it here real quick. So important to make sure your service computation date is accurate, and it's going to give you some of your current retirement information here, so how much you're contributing, any other special provisions that are built in here, as well as your high 3. And then it's going to give you an estimate of your benefits. Like I said, if you go out early under VERA via SIP, if you do MRA plus 10, unreduced, disability, or death, it's going to assign estimates based on that high 3. And you can look with survivor benefits, without survivor benefits. And then it will show you your annuity supplement, at various ages. Remember that happens between ages, your MRA and age 62 is when the annuity supplement can kick in, right before Social Security starts. Important to remember from this report, from this standpoint, from this benefit, I should say, the numbers on this statement are not indexed for inflation or pay increases you may see in the future. Okay, so just based on cost of living adjustments, 2 to 3% pay increases have been probably the norm. I mean, some years where things were a little bit lower than that, and some years where, recently they've been higher than that. So we want to take into consideration those pay increases from a cost of living standpoint. And if you're moving up in your career, if you're increasing in grades, that's going to impact your high 3 dramatically. So you need to adjust that so you have a really better idea of what that FERS annuity is in your retirement plan, how much you might be looking at from that standpoint. Okay, back to the document here. All pretty straightforward stuff, but this will just give you some really valuable information. If you want to look at some more details on each one of those provisions, it's all listed right here. And the last thing that I will say on the total compensation statement, it's going to show you your annual leave. So you can see that your annual leave balance right here and what your potential lump sum payment is. So that is the total compensation statement. In my opinion, like I said, I really think it's the best kept secret in federal benefits planning. And my job here is to make it known so it's no longer a secret. I hope you found this info valuable. Hope you found it useful in creating your plan. If you want to talk a little bit more about your retirement plan, your financial plan, I'd love to be a resource for you. Please feel free to reach out. If not, I hope you can take this information and use it in your financial plan. And if you have a chance, please subscribe to the channel and give me a like. Until next time, guys.